Hey everybody, this is Brett with a market recap for you. Hope everybody had a great holiday season and a great Christmas this past weekend for those of you that celebrate. Lots to unpack here in the markets, and I wanted to run through that with you. Pretty quiet out there right now, but let's go ahead and take a look at some news and take a look at some charts. Okay, I'm going to go ahead and share my screen, and then I'll turn off the camera so you guys can see that a little bit better. All right, so with that, you guys should be able to see that coming on now, and I'll just give you guys a little wave, and I'll go ahead and turn off the camera. So let's dive in here. Some news. We'll come back to this chart here in a moment. And this just we can go around the block a little bit on these. So Binance, so this is from last week actually, but I've been waiting and watching for what could bring us down to another leg lower, which I've been saying I think we will have. And so keeping an eye out for what could take us there. So Binance is, I believe they're solvent. I don't think there's going to be a problem. They handled the 5 billion in withdrawals, no problem that they had last week. And there was some speculation, are they too exposed to all the other contagion around there? But I don't think so. The problem with Binance is that since this whole thing is blown up, they might have shot themselves in the proverbial foot by their role, whether intentional or not, that's debatable, their role in helping to bring down FTX. So as we know, FTX had sold their shares on FTT to Binance, or rather Binance wanted to buy back, sell their interest in FTX, and they did that. And FTX had supplied some FTT token, which, as we know now, is essentially worthless. So when Binance decided to liquidate and sell all of their FTT, perpetuated the big sell-off in the markets. Well, people were hailing CZ as a genius, and the Sun Tzu Art of War, how he took down his greatest component, Sam was talking to U.S. regulators about creating sort of a monopoly. And so in some ways that was a brilliant move by CZ, although I don't know that it was intentional for that. I don't want to get too far down a rabbit hole here, but certainly in the end, they may have hurt themselves as well, because now the entire marketplace is under the microscope. And so if we've got Kevin O'Leary, Mr. Wonderful, as it were, on Congress, testifying before Congress about how Binance helped take down FTX and create this bloodbath that's happening. So there is a possibility that the exchanges do not approve Binance to get approved in the United States by U.S. regulators, and certainly the BNB coin is now going to be under extra scrutiny under the laws of the SEC, whether or not it's an exchange it's in a currency or not. Sorry, guys, trying to go fast here. So that could be bad for Binance. And if they announce there's a problem, and certainly if there was indications that Binance would have trouble in the U.S. because of its role in the FTX takedown, and also Binance, not many people realize this, but whereas FTX was complying and cooperating with U.S. regulators early on, Binance was not, and they were pushing back on that. So this could affect the Binance US business. So it's a possibility. I'm just keeping an eye out for the other shoe to drop here before we finally ultimately bottom, and I don't think we've seen that yet. Haven't seen that final capitulation, although we'll get to this in a minute. There's a little bit more news here. The Bitcoin miners powered off from the big storm this past week, so the computing power on the Bitcoin network dropped about 40% over the weekend. Might explain the quiet and low volume in the marketplace, although I think it's a bit of the quiet before the crypto storm. And so let's take a look at this. We've talked about hash rate. The miners are not really doing much. Doesn't prevent anyone from buying or selling, though. So, all right, on the let's see, the Bitcoin price volatility within days. Let me come back to this. What I wanted to talk about on a positive side is that the whales are buying. And even though they're also selling, we're seeing a tremendous amount of accumulation. And so somebody's been accumulating all along. We don't know. Maybe it's Michael Saylor without talking about it, because he realizes he's a target, but he's not giving up his stance and his golden, or his diamond hands rather. And whether it's Michael Saylor and MicroStrategy, collectively known as Michael Strategy, and which it's just easier to say. So basically, who knows? But we can see this here in this graph that in terms of the accumulation balance of Bitcoin, it's steadily been rising since 2019. And even in the bear market here that we saw, or rather the bear market here in 2022, this is where they've been getting bought up. So it's an inverse relationship. So if you're familiar with the Wyckoff distribution patterns, then you can easily see these levels here and these accumulation zones where Bitcoin gets accumulated and then distributed up toward the top. So this also helps as kind of an inverse here with the Bitcoin addresses almost. And so what we're seeing is on the sell down, we're seeing a lot of buying on the Bitcoin as the price comes down, and it's just crossed over there. And so that's interesting, but early. I think we still could go lower on that, and so it won't go too far down the rabbit hole here. But there's also very low volatility though, so let's come back and then we'll dive into the charts. So the price volatility is very likely to come back. The U.S. markets are closed on Monday, depending on when you see this video. So as of now, things are very quiet, but expectation is that volatility will return this week in a couple of days, within days, because the price is flatlined around 16.8. I've been contending that we'll go down to 14,000 range, maybe 13.9, but certainly supported that area. And other people are starting to agree with me. I saw Rect Capital came out and said something similar here in yesterday or today. And of course, I've been saying that for months. But in terms of the this next bottom here, if we do break down below this range, which I think we will, we'll go down to that 13,000 range. And yeah, here is this quote here by Rect Capital. So, I think that's valid, and that if we come down to that range, then we'd be in a new trading range for a while. Although I think the ultimate bottom, I'm holding out that we could still see 10K to 12,500. And if we get to 10K, we'll probably dip just below that to the CME gap at 97.50. But at any rate, that's the news for today. Of course, that changes daily. We'll have to see what other air quotes news comes out to push this market higher or lower. And we'll see, because there's always good news and bad news. All right, let's take a look at the monthly here. Not much has changed here. This, again, that monthly chart, if it's your first time here, then you've probably not seen this before, but prior market cycles generally go down in the prior two market cycles 85%. So we had that here back in the 2014-15 range. 2018, 2019 came down that full 85%. And we haven't seen that yet this cycle. Does it mean we have to? No. Is it likely? I would say under the current market conditions, it is. So down to this 10,000 range. Let's pull up something else to show you as well. So that's the correction ranges, but let's also look at the upside here and the potential bullish cycles. So let me turn off the bear cycles just so it's not so messy on the correction ranges. And now we are looking at the upside of where things could go. And I've got another chart that sort of indicates and shows that these bull cycles generally last 2 years. And I'll explain these blue arrows here, which is essentially an overlay of the prior market cycle here, just squeezed a little bit. So if we take these same bars here from the last market cycle, 2018, 2019, these things don't never overlap exactly, but this is where I've overlaid this as a probable possible path. And so that would indicate that we do start bottoming soonish, and then could see a push higher and then another retest down to this level. But this next level to test, we have been holding the 16,500 range, and certainly that could, if it holds here and it is putting in a bottom, we don't know, then I would expect a push up into this range about 50,000, and then a slow bleed down in 2023, maybe a push up, and then we kind of see a drop again. Whether the timeline is extended out, not sure when that happens, and then we have that bull market rally. Certainly possible. We had it back here last year. However, this big drop was the COVID crash, so that may be invalidated there, and we just keep going higher. We pull back to around a 28,000 level here, and this is all speculation here, but just to say is what we could see, and then push higher into 2024 without this big back retest to the bottom, because again, that was a COVID news-driven event. All right, but in terms of how high we could go, certainly think 150,000 to 175,000 is reasonable in the next bull cycle. And but there are opportunities. There will be opportunities right in this range. We caught a nice 50% bounce on a trade last week that I covered in a class that I give, and that's pulling back here. But that would be a good one to. These swing trade opportunities are there, and maybe I'll pull that up here in a minute. So let's see. That's the bull cycle. So last push higher is 1,700% in the last cycle. So I think 1,000% is reasonable, hitting that target of around 175,000. And let's see, in terms of what else we can look at, I'll turn this off there. These again are my cycles on the downside. I did want to pull this up first though. And so once we do get into the next bull cycle, these generally run 2 years. And so that would be the good news. Once we start to turn the corner, this has been all 3 of the last bull cycles. It lasts about 2 years once they started to get going. So 2012 to 2014, 2 years. Right in here, these things move around a bit when I zoom in and out. The 2015, really 2016 to 18 range, 2 years, and 2019 to 2021. So once you start turning around, then that puts us right into 2025, and this 2-year run, which is already what we expect, because as we know, the next halving is right around 2024, and the run up usually leads into that, precedes that. So that's worth keeping in mind on the high level. Let's see some engulfing candles on the monthly. Don't need to go through all of this. I do want to pull up some shorter time frames of weekly and dailies, but it is good to get a general sense of which way the wind is blowing on things. And these larger cycles, I do like to look for these engulfing candle patterns, bullish engulfing here and here and here. We have 3 of them. Market ran higher. Had another one here indicating, these pullbacks can still give us opportunities on these macro timeframes. Well, macro timeframes meaning a couple of months, so that's sort of shorter term macro. But here we've seen 3. So we had 3 bullish engulfing on the way up, 4 really, and we've seen 1, and this didn't quite cover it. It was close enough, and then we pushed down, and now we have a bearish engulfing candle here. So I do think we have further downside. Plus, taking a quick look at the MACD, still kind of curving, finding a bottom, but won't be interesting until we make that sort of trajectory turn. And that's also how I knew that we would be going down back here, and told people to get out back in November, and was pounding the table to get into cash last January on this crossover. So no real heavy lifting there. My radar indicator is indicating that some short-term bullish on the daily, weekly, but monthly still bearish, and 4 hours still bearish. So it's inconclusive there. I'll hop over to the weekly charts, and what I've got on this are a couple of things. Both bullish cycles here in blue, so 277 push higher. The red was down 65%. This is kind of going back a couple of years, but as swing traders, these are these cycles I look for, and we've developed a series of signals here that show us this, like this green arrow here, our bullish engulfing candle, and then that was sort of right at the bottom of the March 2020 crash. And for COVID, pushed all the way up here, and then we pulled back and called the bottom again to the day into the week on back in this range. Nice little 100% push higher there. So these are just some things I'm watching. Also watching this moving average right there, which is the I've got it hidden here. Which one? Yeah, this is the 400 week moving average, this red line here. So why is that significant? Well, if we look at the 300 week, which is in here somewhere, let's see which one. That's the 100. Sorry guys, which one is it? It's 50 and 200. I'm looking for the 300 week, which is that black line. So the black line broke. 300 week was very important. And let me turn off these arrows here so you can see that a little bit better. Yeah. So the black line, the 300 week moving average, was the support back here. And if it went back far enough, it came back in here. This was support back in this range. So at any rate, since that did not hold, the 400 week which coincides with the 100 month, is what I'm looking for as a potential bottom here if we come down to that 13,000, just shy of 14,000 right here, and then start to curve higher. So that is so what I would suggest. There's not really strong support here at 16.5 anymore. It was until it wasn't. All right, with that out of the way, let's see. Do I have anything else to show you here on this? And sorry, I think I've got this and not much. Okay, so Bollinger Band, yeah, nothing really else that I want to show here. We could look at the bull market support band, which is interesting and worth watching at times, but in terms of the we're below it, and essentially it tried to break back up through here and couldn't, and broke that back down. So either way, there's not likely a V-shaped recovery here. We would come down and at least test that 400-week moving average, and then we could see this kind of a deep bottoming like that, or some kind of a V bottoming like that. But I think more likely this will come down. We need to find some solid support, and if we just zoom left a little bit, we can see. So I do right back here and draw a line. It's interesting, this coincides at 14,000 level. Now right back to this level, right at the high, the monthly high back in of May 2019. Okay, so that's at 2000, that 14,000 level rather. So this is what I'm expecting. That's what I anticipate, and I don't see anything bullish here at this point that would lead me to believe we're going higher on the weekly. Just not seeing that based on our early reversal indicator and our trend strength indicator. So possible, but we need to see a little more activity, and I don't see that yet. I do think we head lower. But as usual, or as always, I reserve the right to be wrong. We will keep you posted. New information equals new decisions. So here's another look at this on the daily. Now, I had drawn these 3 accumulation zones in prior videos with possible scenarios of what we would do. And I had these drawn before the FTX collapse back here. Actually, this is the weekly, not the daily. And so this has been invalidated here. We can take this off. Obviously, that did not hold. And we are in a nice accumulation zone. I wouldn't be buying at these levels. However, this here is, again, that 300 weekly moving average. Now it's going to be resistance. It's very likely we come down and temporarily hold a 14,000 level. Now, the other scenario is this at this point. We come down here, bounce off that 14,000 level, come up, probably hit resistance on the 300-week moving average, dip back below it again, then we'd break through and then test it as support. So that is another scenario here. If we just want to draw this, I'll change that to black, but that would be kind of going through there. And let's turn it to black so you guys can see what I mean by that. I'm not sure if it's going to let me do this. Can I change that line? I tell you what, I do want to do this the right way. Okay, so I'll draw this again, hand draw it again, and okay, it doesn't let me change the color ahead of time. All right, well, let me redraw this. Okay, so right there. So if it comes up, it'll hit resistance here at this, maybe it'll let me do it. Yeah, there we go. I had a feeling I could do it. Come back up, hit resistance at the 300 week, come back down, put in a higher low, break through it, come down, retest it. This is usually what happens. And this is, timeline wise, is about what I would suggest, January of 2024 is a bit farther out. I think this would be condensed. I just wanted to draw it wide for you guys to see. So these are the 2 scenarios I see playing out. I think still it would be worthwhile to be buying in this range. If we hit down to the 14,000 as a dollar cost averaging accumulation zone, but holding some powder dry for this ultimate plunge, if we get it, if we come down to this 10,000 range and dip down below it here, that would be, I think, the ideal time to buy. Some people are saying 7,000, 8,000. I don't see that, but even if it were, in the scheme of things, that would be, these 3 ranges are the highest probability ranges for the bottom and accumulating Bitcoin and other crypto. Okay, so there's that. Let's jump over here to the daily. Not much to see here. We can draw some other trend lines here and just kind of see this had some support in this range. And let me do one more here on the top side of this, just to see where we would likely hit resistance. So either way, we'd be coming up here, this trend line. It's amazing how these do tend to stay parallel and these levels are respected. So by drawing that parallel line. We saw that was a resistance area here, support here, support was resistance, all the way back here, support. So, these things, this is a very significant line. So either way, if it pushes up into this 19,500 range again, very likely it's going to come back down and retest, either put in a higher low. That's really what we're looking for, though, is a new higher trending channel. And then that's really the only hope of it kind of going higher. And it was, so we want to watch that, but until it's breaking out into a new trend, then it's still in a downtrend. So it's either an uptrend or a downtrend. So I would be looking for something like this that we could draw to signal, hey, this is going in a new uptrend and we've bottomed. But so we're kind of coming to an apex here. But I do think we come back to these lower levels. If we do push higher and can hold at these levels, then break above that prior this trend line resistance and start using this channel as support, then that's a short-term bottom. But again, we probably hit resistance up in these areas, and this is not a lot to be bullish for here. We're not going to see this kind of a push until we get into 2024, and that's right before the halving, or when the halving happens. That's when it starts to run. We'll start to see a little bit of it. We're kind of probably seeing more of this kind of pattern in 2023, and then just like we saw in 2021, the buyers coming back in off the sidelines. So, but on the radar now, bearish, short-term bullish on the daily, but I wouldn't be looking to buy. We could have a few days of slight push higher just based on what I'm seeing, but it just does not seem not strong. Okay, so with that in mind, let's take a look quickly at a couple things. I could look at Bitcoin dominance here, and just sort of running out of steam, it looks like, on that. ETH dominance still holding in this channel we've been watching. So again, I think this red line is still holding and will play out once this thing starts to bottom. Watch Ethereum, and I'm going to set an alert here when it gets back above the 20 line, which is on the ETH dominance chart, because that would show this is turning back around. And as we've been seeing, over time, this big dip down over back in 2017, ETH dominance lower as Bitcoin dominance was rising and the altcoins, but then it turned. And this is the power of isolating, identifying a new trend channel early on, because especially when it's in the upper half of the trend channel. Saw this breakdown earlier this year as the markets did, but it held. It held in this channel here, holding back here. So we're really going to want to watch this and keep an eye on when ETH starts to turn around. The merge was successful for all intents and purposes, so that's that's why it's likely holding, and why I have this little green box there. Could it go lower? Yes, I think we do. Certainly, potentially can. So let's look at that. Where would we likely be wanting to buy Ethereum? Not financial advice, but you can see this buy zone here I've layered out, but all red on my radar. So this is very bearish. I think this heads lower. Now it could certainly hold at 1,900. 900 would be a level I'll be dollar cost averaging back into Ethereum with some, not all, some of what I have been holding and largely sold out earlier this year, and I've been waiting. The secondary buy zone, this is Christmas time. If you missed it all the way back here, nice liquidity pocket and range, prior resistance level. So if we hit 500 to 600, even up to 650, I think this is an ideal dollar cost averaging zone. So set your alerts, and that would be a good area to consider. Maybe getting back in, paper trading, whatever you want to call it, but certainly a high probability buy zone. Not much else happening in the markets here. You've got very little happening, as we've seen, and the U.S. markets are closed, so that's also why it's quiet, day after Christmas, etc. And so that's about all I would pull up here. These are just some things I'm watching. This is a coin, though, that I did catch and called for last Wednesday. Caught a nice little pop on that, on Haven coin, which is a privacy coin. Nice little 50% pop. So with these bear markets, we'll have bear market rallies, and our signals all lined up. And so that's how we caught that. I do think it pulls back here from here, see some profit taking, and then potentially something like this. So anyway, if you'd like to find out more about those, you can go over to moonstream.io/success and find out more about for Success Council, of course, and you can find out more about these indicators with permission, of course. And so, again, if you like what you're seeing here, please like and subscribe. And here's another look at Bitcoin, just two likely scenarios. I'll turn off the radar here. Again, that's one of ours. And so, and also check out the ATR real quick. Still in a downtrend, the average true range. So these are the two likely scenarios here with Bitcoin. I think we could push up here to around 17,800, and then rejects and comes down into these lower levels, as we've been saying. If it does push up, this would be likely sell zone, take some profits, 23,000. Strong resistance up in here. However, if we can get up above it, this would be potentially a buy zone, 25,000, after retesting. But I just don't think we're there yet. Okay, so with that in mind, let's see. Anything else we want to talk about? We didn't look at the overall market cap, so maybe pull that up really quickly. Same story, though, hitting some resistance in this downturning channel. Nothing bullish here, guys. I had drawn this back in October. And, it's probably, I don't want to take it off, but it's probably going to be more like this. And then turn that back to red. So it's same. And then we see this kind of a, the buy zone back down here on the total market cap. Now, it can't easily buy the total market cap, but these are good signals for when it's time to start going shopping in the overall markets. Let's see. I keep that consistent here. Got to do that. How you do anything is how you do everything. And there we go. But that's when, if we get below 600 billion. Wow. Maybe one day, 600 billion, between 5 and 600 billion, these will be a great buy area for many of these projects. Again, that looks awfully similar to Ethereum. So that's what I have my alerts set here at 580 at $600 billion to see when that happens. And if we happens, I can't predict the future, but I've been doing a pretty good job this year so far and since last year. But here again on the total market cap, 3 trillion was the top, came back down around the 2, a little bit on 1.5 trillion, cut in half, bounced up, pushed up to just over 2 trillion. These round numbers tend to be tough to get past, and then back down all the way down here, try to break above a trillion again, couldn't do it, rejected 3 times, pushed up higher to test it one more time and just couldn't get there. So we are likely headed lower on this. So anyway, that's all I have for you guys today. And again, hope you had a great holiday weekend. So if we don't talk to you, have a happy and safe new year. And be careful out there. I think this week we could see some volatility coming into these markets, and it doesn't look bullish to me. We could see a big dump here, potentially some window dressing in the stock market, people dumping their crypto for tax losses, that kind of thing, to take advantage of and take their tax losses against any gains they had in 2022. And so that would be something I think is likely. Usually see some window dressing at the end of the year, end of the quarter, but the end of the year is a big one for those tax loss harvesting. So anyway, everyone, thanks very much, and we will talk to you again next week. Take care, everyone.